Hi, everyone. We're really excited to have this conversation, and I'm personally excited to get to talk with Cameron about his experience building TradeGecko and then going through this exit. I just want to say a couple words. Pegasus Tech Ventures is based in Silicon Valley, but we are a global firm and we're often investing in Southeast Asia, and we're very excited to see this significant exit to a major company here in Silicon Valley. So congratulations, Cameron, and would love to just maybe begin with the provocative question of why you? You know, there's probably other inventory management software companies out there. So what did Intuit love about you guys?
Yeah, interesting question. Look, I think being in Southeast Asia and joining a large US-centric global, technology company, I think the number one thing that I was surprised by, it feels a little bit trite, but that we kept hearing was that the vision and the mission and the culture of what we were doing was very, very aligned with them. And as you pointed out, we had other players in the market, so competitors. But in terms of the segment we went after, the story we were telling the market, and of course, the story about what we've been trying to do, the feedback was the resonance between our businesses and what we were trying to do for small businesses was so perfect. The fit was just exactly what they were looking for. So that's probably more luck than anything, but the thing that we were passionate about is something that they were very passionate about, and that made for a great partnership.
Well, excellent. Well, maybe just in case there are a few people in the audience that haven't heard of TradeGecko, maybe to anchor this conversation, if you just explain a little bit about what you were doing.
Yeah, so in short, TradeGecko was an online inventory and order management platform, but really what that means is we were providing kind of software to small and medium businesses to run the entire back end for growing commerce brands. So it's everything from Fiji water, selling bottles of water online, to your local kind of coffee roaster who sells coffee to 200 cafes. We provide them with the software to run the entire back end operations of their business. And obviously Intuit and Quickbooks, one of the largest cloud-based accounting platforms in the world. So they are obviously servicing, I think, 5 or 7 million small businesses globally with accounting software. So you can kind of see how the two products work quite nicely together.
Well, excellent. Well, let's hold off talking about the effect of the pandemic, because I really do want to dive into that. Let's talk pre-pandemic, because you had been operating TradeGecko for a while before this exit happened. So yeah. How many countries were you in? How did you scale?
Yeah, so we launched the business in 2013. We actually were in JFDI, which was one of the first incubators here in Singapore, and one of the first incubators in Southeast Asia, actually, back in the start of 2012. We were serving customers in about 100 countries, so we were very global in our focus. Almost from day one, we knew that Singapore was a great place to be based, but not a great market in terms of size, scale, and the sort of ambitions we were going after. So we were serving over 100 countries, tens of thousands of people on the platform, all around the world.
Great. And, startups often struggle with both scaling, you get a lot of pressure to grow, but also to manage the growth. So what were your strategies to grow and to get into different countries? And then how did you manage it?
Yeah, so I think for us at least, we from a very early stage partnered closely with other large software providers like Shopify, like Amazon, like QuickBooks as one source of customers. They already had the customers. We partnered with them to work with them to get their customers. The other big thing was we invested a lot in inbound marketing. We did have inside sales as well, so we had a pretty high volume, low touch sales machine based in Singapore, Philippines, Brighton in UK, Toronto in Canada, and a few remote employees as well. So we kind of had a pretty global team serving those kind of 100+ countries.
Wow. Well, you were mentioning that you had a very strong culture and that really mattered a lot to Intuit. How are you keeping the culture together with the team that was so distributed?
Look, it was a lot of work. I think we probably went distributed a little bit earlier in our lives than I would recommend. We had an office in Toronto pretty early on, and that makes things a lot harder, especially for the 12-hour, sometimes 13-hour time zone gap. Maybe a bit of a mistake moving on to such a disparate time zone so early. We did, though, of course, invest a lot in just the cadence of how we met, how we communicated, what it meant to be a gecko. We referred to our employees as geckos. We created this thing called the way of the gecko in terms of, how do we come together, how do we communicate. So I was passionate about that. One of my key executives was very, very passionate about that. So he really drove a lot of that. And it was just about, as I said, having regular cadence of how we connect, how we communicate, spending time together. And when we could, there was also a fair bit of back and forth between the offices. Obviously harder today, but that was another thing we invested in, which was a lot of flights to Toronto and, around the world.
I'm sure. How did you make your choices of which countries to go to when you were working on your expansion plans?
Yeah, probably not as smartly as we should have. We knew Toronto was a great place for technology. It was probably, after San Francisco, New York, and LA, the best technology city in the North Americas from our perspective. However, the time zone and maybe the winters wasn't the smartest move. And in hindsight, we probably over-optimized for budgetary reasons that end of the day were probably a bit too short-term in our thinking. And then the other employees, it was more just where we found great people, we hired them, and then we built teams around them. So Brighton was just, we had someone in Canada who moved to the UK, he brought some friends on, so it was a very organic thing. And definitely something that probably could have been a bit more deliberate, but it worked for us.
And how many countries are you in?
Employee-wise, we're in 5 countries, yeah.
And how many countries are you served? I mean, it's a SaaS software, so you could conceivably serve every country, but curious.
Yeah. So we had customers in about 100 countries. So, wow. All over the world. Yeah.
Oh, excellent. Well, okay. Now we're going to talk about management. You mentioned a couple of things you're thinking in retrospect. So let's talk about advice to startup founders. How do you, if you were going to make a strategic decision, how would you do it now? And how would you measure that you're making the right decisions in case you need course correction?
A strategic decision, what do you mean, sorry?
Like you're saying, well, maybe you ought to have thought about which countries to go into and things. So if you're going to do it in hindsight, what might you have done if you have advice for people?
I think that the number one thing we should have done is we should have just talked to people that had done it before. We made our best guess assumptions. We talked to a few people, but really, let's be honest, we're a B2B SaaS global focused company. There's some clear markets we could have gone to, San Francisco being one. So I think talking to people that are 2 to 3 years ahead of you doing similar things to yourselves, everyone who has a global headquarters company, the next office usually is San Francisco or at least somewhere in California. And so that was probably a pretty obvious decision we didn't take. So I think, to be honest, speaking with a few people that I now know who have kind of done what I wanted to accomplish would have been the smartest thing to do. Just getting advice from people that have been there and done that, making better mistakes than having to make them all yourselves. So that was probably the number one thing I wish I'd done a bit better, is had stronger and a better advisory board.
Well, but you did it. So you stood out both in terms of being in the 100 countries and also having this alignment with Intuit. How did the relationship with Intuit start?
Yeah, so we partnered with Intuit as like an integration partner for 5 or 6 years actually, and it was funny because when they reached out to us to talk to us more seriously about joining them, he emailed me the corporate development, and I actually went to spam, and so I didn't see the email. And then they messaged me on LinkedIn, and they're like, "Hey, did you see our email? Like, is it okay if we talk?" And I was like, "Okay, yeah, of course we can talk." Had no idea what it was about. But the feedback that they'd gotten is that they'd seen us as a partner. We'd never really invested, from our perspective, anywhere near as much as we should have in terms of building those relationships. But they'd seen that of their customers, we were, the top platform that their customers chose when they worked with an inventory management platform. So our technology partnership was really critical for even the conversation starting. So again, it's a very common thing for partners to buy their partners or to work with their close with their partners. We just didn't invest anywhere as much as we should have in terms of building those relationships. Thankfully, it worked out. And it probably worked out because, as I said, our culture was great, our product was great, and we probably did the primary thing that was necessary, which is we had really happy customers, shared happy customers. So yeah.
Well, excellent. Well, I'm glad it all worked out, but I love that you keep saying, well, here's what I might have done differently, because we are hopefully spreading the word to the rest of Southeast Asia and how they can get to an exit as well. So maybe just if you wouldn't mind to double down on when you say you might have invested more in the partnership, what would you like to have done that would have maybe, you would have been, maybe you just even weren't even thinking about acquisition. Maybe just thinking about it would have been something different to do. So.
Yeah, I mean, it's funny, right? Because it was very obvious in terms of everyone can give the advice that you should work with your partners closely because obviously they're great sources of customers and quite likely your large company partners, if you're of value to their long-term strategy, could be great people to acquire your company. I think, to be frank, we didn't take the time, and this is entirely a me thing, right? As the CEO, everything was both my fault and responsibility to invest in just spending time, investing and spending time in the Bay Area where our partners are and building those relationships. And I don't think we spent the time because it's always kind of like it's a short-term investment for a long-term payoff. And as a startup, you're always dealing with fires. And so it always seems a little bit selfish to invest in things that have some kind of longer-term time horizon. But obviously, those are the things that are the most important, is taking the time to build kind of and make investments in long-term kind of opportunities. But as I said, I just felt like we did it a bit, but we never did it as much as we could have because we were always probably fighting fires. All startups are fighting fires. I just think we could have ignored a few more and invested in some of these, as I said, longer-term optionality kind of paths. And that's, as I said, just I think, first-time entrepreneur mistake.
Well, we all learn that way. You can only learn by doing, really, except by listening to other people's experiences. So hopefully this will be helpful to some of the other founders. So I'm in the United States. I'm in San Francisco, where fortunately we do not have an extremely high incidence of COVID-19, but the pandemic is still, quite extreme in the United States, and small businesses are really, really suffering. And there are many parts of the world where that is still true. So we're in this great celebratory moment with you right now, but maybe 6 months ago, things were not quite so upbeat. So tell me, how did you manage through it?
Yeah, and look, there's a little bit of a public news in January, I think it was. So it's not it was actually pre-COVID. So I'll tell the story because it's an interesting one, and we came out the other side, thankfully. But look, we were in classic growth mode, probably trying to grow faster than was natural for our business, as entrepreneurs and startups tried to do last year. And we were burning a lot of money and a lot of investor money, but we were also making a lot of money, thankfully. And end of last year or early this year, things got a bit volatile, and we had to kind of really right the ship, as it were. So we did have to let go of a number of team members. We went through this weird phase of letting go of some great other geckos because we just had grown too large. We then had COVID hit. We then saw our fastest growth of all time. We then became profitable, and then we exited into it. So it's been a very tumultuous 2020, to be perfectly honest. Feel like I got a lot of gray hairs, and to be honest, I think the number one thing was just there were really hard things to do, but once the decision was made, me and the team and I, we had to go do them. Like, it was just, there wasn't a choice, right? We had a great team, some of whom sadly we had to let go, but the critical thing was that we could continue to live for another day, serve our customers. We actually found, in hindsight, we'd grown faster. We'd tried to grow at a faster pace than was natural. So by actually kind of resizing the team, we were actually more effective. As I said, through COVID, we actually saw a burst of growth because a lot of businesses were moving online. We worked very closely with a lot of our customers who were also struggling. Our customers are small businesses, and helping them move online, helping them develop sales channels. And then, as everyone here knows, e-commerce boomed. So we really got I guess we caught the rocket ship, as it were, of commerce growth, and that really helped our customers. And our customers' growth helped our business as well. So, some lucky steps there. I think the only thing I can claim is that we position ourselves in a market that is obviously growing really nicely already. And as people have said, all I think COVID did to e-commerce is it brought 10 years, brought the future of 10 years to today. So we really just saw the compression of that acceleration into e-commerce, and we were able to benefit from that and obviously help our customers. So But again, a huge learning curve. It was very, very stressful at times, but I wouldn't have done it any other way, because the things we had to get through. I mean, if only one thing, getting profitable, was absolutely amazing. And then obviously managing to join a massive company like Intuit was also amazing. So yeah, I mean, 2020, I think for a lot of people is a year we won't forget, but especially for us and the team.
Yeah, well, that is a lot of drama. And getting to profitability, if you hadn't had COVID, what would have been some things you might have, now that might have really helped you advance that?
I think the biggest thing for us is that we really, really studied CAC and LTV and what we call product market fit and net revenue retention. And so for us, we had hundreds of thousands of people coming to the website every month, with thousands of people signing up for the product and hundreds of customers joining us each month. But what we kept doing is pushing more and more into the funnel, and the spread and the type of customer was getting very different from each other. And so we really had product market fit for some subsets of those customer bases, and we had great CAC, LTV ratios, great revenue expansion, great cohort retention. But we kept investing a huge amount of money into marketing, and we had this diminishing marginal return. So if you can imagine a diminishing marginal utility curve. But the thing is, when you're trying to grow fast, you just don't know how to press the brakes, even though you should, because you made commitments to the board, to investors. And if nothing else, I think the biggest thing was just having the confidence as a CEO to say, like, this doesn't feel right. I can't measurably tell you how it's not right, but I know that there's customers that are sticking around and loving it. And I know that there's a ton of customers that we're bringing on board that we're not serving well. And if we're not serving them well, then we're not doing our jobs. And so I think the biggest thing is for it to be okay to press pause on the growth. And in hindsight, we didn't actually grow slower. We grew faster once we'd paused and focused on the right customer. And something that we thought, well, if we press pause, it might take 6 months. We pressed pause, and within a month, we were growing faster, because we could narrow our resources on a smaller group of customers who could actually get a huge amount of value from the platform. And instead of spreading ourselves over this massive type of customer growth, who we knew we weren't going to be able to create a lot of value from. So, I mean, it gave us the excuse, never let a good crisis go to waste. But if I'd had the experience, or maybe again a stronger advisory team, or if I'd listened more, there's nothing new in what we did. We just had COVID force it upon us in a way.
Excellent. Well, thank you for being so transparent and sharing such really valuable learning experiences with everyone. I really, really appreciate that. As you look now at the SMB space, do you see massive growth potential still? Do you see specialty needs still in the SMB space? What is your view of that?
Yeah, I mean, look, frankly, I still think it's, as they say, day one when it comes to SMB SaaS. I think we moved to Singapore in 2012, and only today in 2020 do I think there's some SaaS companies actually starting to make a difference and actually get some growth in Southeast Asia. So there's still 10 million underserved, SMBs just in Southeast Asia. So again, I think it's so early innings when it comes to SaaS for small businesses. I think it's a really hard market to go after, because acquiring 10 million small businesses is a very difficult task. But obviously there are more and more companies proving how to do it, Xeros and Shopify's of the world. So yeah, I mean, I think we're going to continue to see the commoditization of enterprise software and the beautiful, simple software for small businesses. And I think there's probably a dozen companies doing over 100 million revenue in the CRM space, just the CRM space, maybe more. There's probably half a dozen just in the customer support space. There's so many markets, and then you get verticals within those markets. So you can get I saw someone who's doing software for automotive repair shops, and they have a really healthy tens of million revenue business. There's these verticals of small businesses which have a huge amount of value. So as I said, I think there's a huge amount of opportunity. I think the way you go to market in Southeast Asia is still different from, say, Australia, but I think it's all about learning and iterating and focusing, and end of the day creating value. So yes, I think it's still very early. A lot of spreadsheets still being used by small businesses, that's for sure.
Yeah, a lot of pen and paper and everything. So just maybe for entrepreneurs that are in any space in Southeast Asia, what would be another tip you would have, some advice? You mentioned before about speaking to somebody maybe who's 2 years ahead of you as one. I thought that was a really valuable bit of advice, but anything else you have for the region?
Yeah, that's interesting. I think one of the other things I've found fascinating in Singapore is we kind of sit at the crossroads of a lot of things, which is a brilliant thing. And taking advantage of that, in my mind, means we can take the best of what the Western world, San Francisco, is doing in technology, and then we can also look really closely at what people are doing in China. And as we all know, China and India, are miles ahead in some industries when it comes to technology than, say, against the United States. And what I think is really interesting is I think Southeast Asia is going to be a blend of the both. I don't know how, I don't know which ways, but you're going to get, you're going to get players from and a lot of capital from China, from Japan, and then you're going to get the same from places like the USA. And I think studying those two markets and what's happening in those landscapes, and they are fundamentally different in many ways, is really, really interesting. You can't apply either to this region, but some combination of both will definitely help. And so it's one of those things I find fascinating is reading all the not the S1s, it's called an S1 in the United States, but what they're called on the Hong Kong Stock Exchange when they go public, like these companies and what they're doing is just fascinating, these Chinese companies. So taking the time to learn about the big players and all the innovative things that are happening around the region, I think is really, really important.
Well, excellent. Well, we are unfortunately over time, but again, I want to congratulate you and your entire team and wish you good luck in the integration, especially as you're doing everything remotely. So I hope that goes well and that we see many more exits coming out of the Southeast Asia ecosystem.
Thank you. And hopefully next time we can do this in person, have a proper tea or coffee.
Absolutely. I want to be there where you are, that picture. So, thank you.
No, thank you.